Hello friends, today we are going to study an introduction to GST. So before understanding what is GST, let us first understand what is a tax. A tax may be defined as a financial burden laid upon individuals to support the government, a payment enforced by legislative authority. A tax is not a voluntary payment or donation, but an enforced contribution made by the individuals to the government. So, tax is not a voluntary payment, but an enforced payment. Means it is mandatory that you have to pay tax. It is not at your will. So, in simple words, tax is nothing but money that people have to pay to the government, which is used to provide public services. So, kinds of taxes. Taxes may be direct taxes and indirect taxes. So, let us first understand what is direct tax. So, a direct tax is a kind of charge which is imposed directly on the taxpayer and paid directly to the government by the persons on whom it is imposed. A direct tax is one that cannot be shifted by the taxpayer to someone else. A significant direct tax imposed in India is income tax. Means a tax, or you can say that direct tax is a tax which is paid by a person or individual on whom it is imposed, and such person cannot shift the burden of payment to someone else. Like income tax, if income tax is charged on you, so you have to pay the tax on your income to the government, and you cannot shift this burden to someone else. So next tax is indirect taxes. If the taxpayer is just a channel, and at every stage the tax incidence is passed on till it finally reaches the consumer who really bears the burden of it, such tax is indirect tax. An indirect tax is one that can be shifted by the taxpayer to someone else. Means you can shift the burden of indirect tax to someone else, like the supplier of goods and services shift his burden of tax to the consumer. Means the supplier has to pay the tax to the government, but he shifts his burden of tax to the consumer, and he collects the tax from the consumer and pays to the government. So indirect tax, and this can be shifted. Next, you can see that direct tax, the person paying the tax to the government directly bears the incidence of tax. Means on whom it is imposed has to pay the tax. Then progressive in nature, high rates of taxes for people having higher ability to pay. Means higher the income, higher will be the tax. Then indirect tax, the person paying the tax to the government collects the same from the ultimate consumer. Thus, incidence of the tax is shifted to the other person. Means you can shift the burden of tax, burden of indirect tax to the other person. Like supplier shifts his tax to the consumer. Regressive in nature, all the consumers equally bear the burden irrespective of their ability to pay. Means irrespective of their paying capacity. Means whether he is rich or poor has to pay the same amount of indirect tax irrespective of their paying capacity. Next, you can see that the burden of tax borne by the person himself in case of direct tax, and in case of indirect tax, the burden of tax shifted to another person. You can see in the picture. So, what are indirect taxes and direct taxes? First, let's see what are indirect taxes, like like goods and services tax, custom duty, and direct taxes like income tax. Then let's see the features of indirect taxes. So let us first start with an important source of revenue. See, indirect tax is an important source of revenue for the government. Like a government collects more than 50% of its revenue from the indirect taxes. So it is an important source of revenue for the government. Then tax on commodities and services. See, indirect taxes are charged on most of the goods and services, like almost all the goods and services. So, shifting of burden, this I have already told you that the burden of indirect tax can be shifted from one person to another, like supplier shifts his burden to the consumer, to the ultimate consumer. Then, no perception of direct pinch. See, generally, the indirect taxes are inbuilt in the price of the product and services that the consumer sometimes unknowingly pay. The indirect tax means that the price is included, price includes the indirect taxes. So it is an inbuilt tax. So there is no perception of direct pinch, means you just don't feel that you are paying the taxes because it comes with the price of the product and services. Then inflationary, okay, higher the taxes, higher will be the prices of the product and services. So indirect taxes increases the price of the product and services and brings a inflationary trends. Then wider tax base. Unlike direct taxes, indirect tax has a wider base. Why? Because indirect taxes are charged on lot of goods and services. It has a wider base. Then promotes social welfare. See, there are some goods and services on which government charges very high rate of indirect tax, such as in case of alcoholic products or tobacco. This not only checks the consumption of these sin goods, but also collects lot of revenue for the government, which government uses for social welfare, for making investments in infrastructure and various welfare policies. Then regressive in nature. Regressive in nature means that the amount of indirect taxes paid by the rich and poor in the same proportion, means irrespective of the paying capacity, whether rich or poor has to pay the same amount of indirect tax, unlike your direct tax. Next, so let us now understand the concept of GST. So, what is GST? GST is a comprehensive, multi stage, destination based consumption tax levied at every stage of value addition in the life cycle of a product. So, let us now understand the various terms used in the definition of GST. So, first to start with, comprehensive. What does this term mean? What is comprehensive? Comprehensive means GST has replaced almost all indirect taxes, plus by bringing in a unified taxation system across the country. It has ensured that there is no more arbitrariness in tax rate. Means now there is no more confusion. GST subsumed almost all the indirect taxes. So it is comprehensive. It includes all the indirect taxes, almost all the indirect taxes. Second is multi-stage. GST is levied at each stage in the supply chain where a transaction takes place. Multi-stage means whenever goods or services transfers from one party to another, means every time the transaction takes place, GST will be charged. Suppose a commodity manufactured, then it will be transferred to wholesaler, then to retailer, then to consumer. So at every stage GST will be charged. When a transaction takes place between two parties, then GST will be charged. So it is multi-stage tax, means charged at multi-stage. At every stage GST will be charged. Next, value addition. Value addition means process of adding the value of a product or service at each stage of its production, exclusive of initial cost. Under GST, the tax is added only on the value added. Suppose commodity transfer from manufacturers supply the commodity to the wholesaler, then wholesaler to the retailer, then retailer transfer it to the consumer. Then every time value is added, GST will be charged only on the amount which is added, not on the total amount. GST will be charged on the amount added, on the value added, not on the total value. Okay. Then next, destination based consumption means collected at the point of consumption, unlike earlier indirect taxes. The taxing authority with appropriate jurisdiction in the place where the goods or services are finally consumed will collect the tax. Means tax will be charged at the place where goods are consumed. Suppose goods is transferred, a supplier is in UP and he supplies his goods in West Bengal. So tax will be charged in which state? In West Bengal, because the destination is West Bengal. So it is a destination based consumption. Next, framework of GST as introduced in India. So let us see what is the framework of GST. In India, we have adopted a dual GST model. Dual GST means, see, let's understand what is this. India has adopted a dual GST model in view of the federal structure of the country. Consequently, center and states simultaneously levy GST on taxable supply of goods or services or both, which takes place within a state or union territory. Thus, tax is imposed concurrently by the center and states. Center and states simultaneously tax goods and services. Now, the center also has the power to tax intra-state sales, and states are also empowered to tax services. GST extends to whole of India, including the state of Jammu and Kashmir. See, because we have a federal structure, means we have states, then center. So tax are to be divided amongst state and the center. So we have dual GST model, one for state and another for center. In further slides, we will see all the types of GST. So now you can see we have CGST, we have SGST, UTGST, and IGST. So, GST is a destination based tax applicable on all transactions involving supply of goods and services for a consideration subject to exceptions thereof. Means GST will be charged on almost all the goods and services with some exceptions that we will see further. So now you can see the types of GST which we have. One first is Central Goods and Services Tax, that is CGST, levied and collected by central government. Then we have SGST. SGST means State Goods and Services Tax, levied and collected by state government. Then we have Union Territory Goods and Services Tax, UTGST, levied and collected by union territories without legislatures. See, in we have two types of GST basically, for center and for states. If it is for state, it is SGST, and for center, CGST, and for union territories it is UTGST. So the above taxes, CGST or SGST or UTGST, are applicable in case of intra-state supplies of taxable goods and or services. Means in case of intra-state means within the state. If goods and services are supplied within the state, within the boundaries of a state, within the geographical boundaries of the state, then these taxes will be charged. Which one? CGST, SGST, and UTGST. Suppose it is suppose a supplier supplies goods in UP. Then what are the taxes to be charged? CGST and SGST, because UP is a state with a legislative assembly. So if it is a state, then SGST will be charged as well as CGST. But if it is a union territory, then CGST plus UTGST will be charged. Next, we have Integrated Goods and Services Tax, that is IGST. IGST is the sum total of CGST and SGST and or UTGST, and is levied by center on all interstate supplies. Means IGST is the sum total of CGST, SGST, and UTGST, charged, means levied and collected by the central government in case of interstate supplies, when goods or services are supplied from one state to another state or another union territory or foreign territory. Let's see. Now, from this picture, it is very clear. You can see state one. If it is a state, suppose it is UP or it is West Bengal. So in these states, what will the taxes? Taxes will be CGST plus SGST, means Central Goods and Services Tax plus State Goods and Services Tax. Then, if goods are supplied from one state to another state, like in the picture, from state 1 to the state 2, then IGST will be charged. IGST. Then, if supply is made within the state, then again CGST plus SGST will be charged. If it is again supplied to another union territory or another state, so it is supplied to another union territory, then again IGST will be charged, means integrated GST, which is a sum total of SGST and CGST. Then you can see in the union territory, UTGST plus CGST will be charged. When it is supplied to foreign territory, then again IGST will be charged. So from this picture, it is very clear that we have a dual GST model. Next, let us talk something about registration. So in this picture, in this table, there are some threshold limits are given, like if a supplier's turnover is more than this threshold limit, then he must get himself registered. Like you can see in the first column, States with threshold limit of 10 lakhs for both goods and services means a supplier making supplies of goods and services of more than 10 lakhs in a year, then he must get himself registered. And 10 lakhs is the limit for which states? For Manipur, for Mizoram, for Nagaland, and Tripura. 10 lakhs is for four states, that is Manipur, Mizoram, Nagaland, and Tripura. The next, states with a threshold limit of 20 lakhs for both goods and services. These states are where limit is 20 lakhs. Means if supplier makes supplies of goods and services more than 20 lakhs, means above 20 lakhs, then he must get himself registered under GST. So what are the states? Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, and Telangana. Then third, states with threshold limit of 20 lakh for services and 40 lakhs for goods. See, in this column, we have different limits for services and different limit for goods. So what are these states? These are Jammu and Kashmir, Assam, Himachal Pradesh, and rest of the states. What are the states left? For them, the limit will be different. It will be 20 lakhs for services and 40 lakhs for goods. So now from this picture, you can see that what are the indirect taxes that are subsumed in the GST. Means GST has replaced all these central and state taxes. Let us first see what were the central taxes which are subsumed in GST. So number first is central excise duty and additional excise duties, then service tax, then excise duty under Medicinal and Toilet Preparation Act, then CVD and special CVD, central sales tax, central surcharges, and cesses insofar as they relate to supply of goods and services. So these are the taxes, these are the indirect taxes charged by the central states, which are central taxes which are subsumed in GST. These were charged by the center. Now let us see what are the taxes charged by the states which are subsumed in GST. So these are state surcharges and cesses insofar as they relate to supply of goods and services, entertainment tax, except those levied by local bodies, then tax on lottery, betting and gambling, entry tax, all forms and purchase tax, VAT or sales tax, then luxury tax, then taxes on advertisement. So all these state taxes are subsumed in GST. Then let us see, there are some exceptions in the GST. We will see in this table, like within GST or outside GST. Alcohol for human consumption. See, alcohol is not included in GST, means it is outside the purview of goods and services tax. Means no GST is charged on alcohol. So power to tax remains with the state. Then five petroleum products. These are crude oil, diesel, petrol, natural gas, and ETF. In this, GST Council to decide the date from which GST will be applicable. Then, entertainment tax levied by local bodies. See, all other entertainment tax, in all other entertainment tax, GST will be charged except in the local bodies. So, entertainment tax levied by local bodies, power to tax remains with the local bodies. And in all other entertainment taxes except charged by the local bodies, that will be charged under GST. Then tobacco is within the purview of GST. So power to levy excise duty is also retained. Means tobacco is under the purview of GST. Then let us understand what are the benefits of GST. So let us first start with, we have categorized in three category. So let us first start with for business and industry. Let us see what are the benefits of GST for business and industry. So first one is easy compliance. Why I'm saying easy compliance? Because of online registration, online return filing, and payment of tax, which has made this system more transparent and easy compliance. So next, uniformity of tax structures, tax rates and structures means now we have one nation, one tax, we have a unified taxation system, means we have a we have a common tax rate for all the states, means common for all, which increases certainty and ease of doing business. Next is removal of cascading. Cascading means tax on tax. So, with the inception of GST, tax on tax is removed. See, GST has brought system of seamless tax credit throughout the value chain across the boundaries of the states, would ensure that there is minimal cascading of taxes, which reduces hidden cost of doing business. Now, GST has also improved competitiveness. How? With reduction in transaction cost of doing business, this eventually lead to improved competitiveness for the trade and industry. Then we have gain to manufacturers and exporters. How? Cost of locally manufactured goods got reduced with the inception of GST. This will increase the competitiveness of Indian goods and services in the international markets and give boost to Indian exporters. Because of uniformity in tax rates across the country, reduces the compliance cost as well. So let us see what are the benefits for central and state governments. So first one is simple and easy to administer. See, multiple indirect taxes of the central and state levels are being replaced by GST. I told you in earlier slides that there were a lot of indirect taxes charged by the center and the state, which are subsumed in GST, which are replaced by GST. So now we have also a robust end-to-end IT system, means we have a IT system which is backed by a robust infrastructure. GST would be simpler and easier to administer than all other indirect taxes of the center and state levied so far. Then next we have better controls on leakage. Leakage uh, means you cannot avoid taxes. See, this will result in better tax compliance, means inception of GST will result in better tax compliance due to the robust IT infrastructure, due to the seamless transfer of input tax credit throughout the value chain, means you can avail credit at every stage of the value chain. So there is an inbuilt mechanism in the design of GST that would incentivize tax compliance by traders. So next we have higher revenue efficiency. GST is expected to decrease the cost of collection of tax revenues of the government. Means earlier, government has to spend much on tax collection, which is now reduced. The cost of tax collections of the government is now reduced with the inception of GST and will therefore lead to higher revenue efficiency. So let us move. Now we have what are the benefits for the consumer. Simple and transparent tax proportionate to the value of goods and services. Due to the multiple indirect taxes being levied by the center and state with incomplete or no input tax credits available at progressive stages of value addition. Earlier, there was some flaw in the indirect tax system. You cannot avail the tax credits, but now it is possible with GST. The cost of most goods and services in the country today are loaded. Today, these were loaded with many hidden costs, with many hidden taxes. Earlier, there were many hidden taxes included in the product and services. But under GST, there would be only one tax from the manufacturer to the consumer. There will be only one tax, or there is only one tax from the manufacturer to the consumer, common for all. So, leading to transparency of taxes paid by the consumer. So, it brings transparency. Then, relief in overall tax burden. You know, because of efficiency gains and prevention of leakages, the overall tax burden on most commodities will come down, which will benefit consumers at large. Thank you.